Hi, my name is Justin Brown. I'm the Director of Investments here at Greenspring Advisors and lead Greenspring's Investment Committee. Today I'll be sharing highlights from the first quarter of 2025. Starting with market performance for the quarter, after 5 straight positive quarters for U.S. markets, which is the best streak since the stock market recovery after COVID in 2020, the U.S. posted negative returns of 4.72%. Outside of the U.S., we saw positive returns in international markets, which were up 6.2%, emerging markets up nearly 3%, and global real estate up 1.37%. In the bond market, the U.S. market added value, posting a 2.78 return for the quarter, while global bonds outside the U.S. were nearly flat, with a negative 0.17 return. Longer-term performance remains strong as we see positive returns across most of these asset classes over the 1, 5, 10, 15, and 20-year time periods. We often talk about the importance of investing in a globally diversified portfolio. With the U.S. stock market down this quarter, it's a great time to revisit why this approach makes sense. This is one of my favorite charts for illustrating why we invest not just in the U.S., but across the world. It tracks the performance of the 12 largest stock markets over the past 30 years. Each column represents a 5-year time period, and each number shows the annualized return for each country during that time. The U.S. is highlighted in light blue, and while it has led global markets in many of these periods, especially for much of the last 10 to 15 years, there's also been long stretches where it has underperformed. A great example is the lost decade from 2000 to 2010, when U.S. stocks delivered flat to negative returns for an entire 10-year time span. So why invest globally? And why do our portfolios include over 40 countries? Because diversification helps to protect against prolonged downturns from being too reliant on any one market, just like the lost decade for U.S. stocks. Looking at this year's market performance, we see just how important diversification can be. In the first quarter, as I mentioned, the U.S. market was down nearly 5%, while international stocks were up more than 5%. A gap of over 10% in favor of international markets. Investors who only have a U.S. exposure probably feel a lot worse about their portfolio than those who have a diversified exposure. Now, to be fair, if we looked back at Q4, we see the opposite scenario, with the U.S. outperforming international, and the U.S. is coming off a couple of very strong years of performance. But that's the point. Predicting which country's stock market will lead in any given year or period is incredibly difficult. This quarter serves as a reminder of why we believe in maintaining a globally diversified portfolio. By spreading investments across markets, you avoid over-reliance on any one country and increase the likelihood of capturing returns wherever they arise. Another way we diversify portfolios is through fixed income or bond exposure. One of the primary roles of bonds is to provide stability and act as a buffer during stock market downturns. So with the U.S. stock market down nearly 5% for the quarter, how did bonds perform? Well, bonds have done their job. U.S. investment-grade bonds are up nearly 3%, outperforming U.S. stocks by 7.5%. Global bonds are flat, but still outperformed U.S. stocks by 4.6%. TIPS, or Treasury inflation-protected bonds, which hedge against inflation risk, were up 4.2%, outperforming U.S. stocks by 9%. And while this is just one quarter, it reinforces the role of bonds in a portfolio, and it's good to see them deliver on their objective. The last thing I want to highlight is that if you're a client with Greenspring, your portfolio is not what you hear about in the news. When you watch or read the financial news, the focus is often on big-name stocks like Apple, Tesla, Nvidia, Amazon, Google, Microsoft, Meta. These stocks were deemed the Magnificent Seven after their recent surge in 2023 and 24. And to their credit, after a steep sell-off in 2022, they have had 2 great years. But in Q1 of this year, the media is now again highlighting their sell-off, with these stocks being down an average of 16%. You may also hear things like how the NASDAQ, which is heavily weighted towards technology stocks, is down 10%, or that the S&P 500, which represents large-cap U.S. stocks, is down nearly 5%. Here's what's important to remember. Again, if you're a Greenspring client, these stocks and indices that the media talks about are not your portfolio. While you do have exposure to these stocks, your portfolio is far more diversified. To highlight a few, Your portfolio also includes international stocks, which were up 5.4%, global real estate up 1.5%, U.S. investment grade bonds up nearly 3%, and TIPS up over 4%. Investing isn't about avoiding risk altogether. Without risk, there's no potential for reward. Instead, our focus is on targeting risk appropriately and diversifying portfolios in a way that helps to narrow your range of outcomes. This creates opportunities for your portfolio like we see this quarter. When one part of the market struggles, other parts of your portfolio can help to balance it out. That said, your portfolio's specific returns will depend on your overall asset allocation, which is essentially the balance between stocks and bonds that you have in your portfolio. If you'd like to discuss the details of your portfolio and how we've built in diversification to help protect you, don't hesitate to reach out. To sum it up, 1, diversification matters. We intentionally build diversification into your portfolio from the start to help reduce risk and better position you to achieve your investment goals. 2, ignore the noise. What you hear in the news about market performance is often very different from how your portfolio is actually performing. And while financial news can be informative and sometimes entertaining, it's important to keep this perspective in mind. And lastly, we're here to help, whether it's discussing your portfolio, your financial plan, major life decisions, or whatever it might be. On behalf of the Investment Committee at Greenspring Advisors, thank you for your time today. As always, please feel free to reach out to us with any questions.